Welcome to the ChargePoint podcast, brought to you by FlexiCharge, your gateway to the future of EV charging. In each episode, we dive deep into the world of EV infrastructure, offering insights and perspectives from industry leaders, innovators, and the people at the forefront of deploying charging solutions and networks. Join us to explore the exciting developments that are accelerating our world towards sustainable mobility.
Welcome back to the ChargePoint podcast. I'm your host, Christophe. Over the past few months, you've heard us talk about two big milestones: our virtual power plant project with Recharge and the launch of our co-located BESS pilots with Recharge and Q8, both major steps in turning EV infrastructure into grid-integrated revenue-generating energy assets. But how do these innovations actually fit into the broader energy market? How do spot prices, local flexibility markets, and congestion zones affect what CPOs can do next? That's exactly why I invited Philippe Vassilopoulos, product director at EPEX SPOT, to the show. Philippe leads product and algorithm design at Europe's largest power exchange and has spent over 2 decades shaping how electricity markets function. In this episode, he breaks down how spot and intraday prices are set and why CPOs should care, why local flexibility markets are exploding and how they're solving real-world grid congestion, and how assets like EV chargers, batteries, and heat pumps are starting to participate in these markets at scale. We'll also dive into EPEX's collaboration with UK Power Networks, where over 250,000 flexible assets are already helping solve grid bottlenecks, including EVs. If you're a ChargePoint operator looking to future-proof your sites, tap into new revenue streams, or just better understand how to play in the energy markets, this episode is packed with insight. Let's get into it. All right, let's get started with today's episode with Philippe Vassilopoulos from EPEX SPOT. Welcome, Philippe.
Thanks, Christophe. It's great being here. Thanks for having me. I'm looking forward to a good discussion.
Me too. I've been looking forward. Yeah, we've been exchanging for quite some time now. And we are passionate about some of the same topics. So can we start, as always, by an introduction? Can you give us a background or give us your origin stories that led you to the position where you are today?
Absolutely. I like the term origins story. So I'm Philippe Vassilopoulos. I'm director of the product development or product design and algorithm departments at EPEX SPOT. I have been leading this role for more than a decade now. My background is I have a PhD in industrial and energy economics from the University of Paris-Dauphine. And it all started really 2001 when I was doing an exchange abroad program with the University of California. During that, my junior year in California, there was the energy crisis, so the notorious California energy crisis. And my colleagues, mostly coming from engineering backgrounds, were telling me that it's all the economists' fault and markets are not working well. So, I just decided that I wanted to investigate that. And that was really the beginning of a love story with electricity markets that never left me. So for more than, almost a quarter of a century now, I've been focusing my work on electricity markets, how they can become more efficient and how they can guide our society to become, to better use electricity at the right time. So it's all about spot electricity pricing and how these can guide the decisions from operations, but also investments point of view.
Quarter of a century, yeah, that's some experience. Let's unfold that. So you lead product at the EPEX SPOT. So can you give us a quick overview of your role and how EPEX SPOT fits into Europe's energy landscape today?
Sure, absolutely. So first, let me remind what is EPEX SPOT. EPEX SPOT is the European Power Exchange. The core business of the European Power Exchange is to operate a power exchange, so a physical electricity market. That means managing a community of more than 400 100 companies that are connected to our trading platforms, trading systems, and that buy and sell electricity on a daily basis. Our market solutions include day ahead, intraday. We also have an aftermarket for ex-post trading in the Netherlands and Belgium. We offer a capacity market in France, European-wide guarantees of origin auction, which is bi-monthly. And more recently, we have been operating local flexibility markets, so distribution markets for distribution system operators. And we do have some data services. So our services span over 19 countries. So this is a very much EU-wide approach with the continental Europe, the UK, Switzerland, the Nordics, Poland. And we do offer some operation services for Ireland, for Hungary, Montenegro, North Macedonia, Serbia, and Slovenia. What do market participants do? Basically, they use our trading systems and our clearing infrastructure. They place orders to buy and sell electricity for a given delivery area and for a given time period. And our role as a power exchange is really to match these orders in a transparent manner according to some exchange rules, and to broadcast these prices as widely as possible, because they serve as benchmark for many transactions in the wholesale market.
Clear.
On my side now, from the product development perspective, so I lead the product development team. We are 6 persons in product development at EPEX. We also have one PhD candidate that's working on energy communities, and the algorithm team, which involves 4 persons. The role of the product development team is to design, develop new markets and products for wholesale market, and propose the products that our customers want to trade. That, of course, allows us to accommodate the needs of the market participants in a highly complex electricity power market. It also allows us to differentiate from our competitors by innovating into new markets, new products.
Makes sense. So I think it must be some product-led initiative, right? So you expanded into flexibility markets recently with the local flex project, which you in London as a flagship example. Can you tell us what this project is about and what role EPEX is playing here?
Yes, indeed. So local flexibility markets are relatively recent. I mean, they have been developing for less than a decade, and they are about first managing congestions and using the assets, be it on distribution grid, but also potentially on transmission grid, to solve congestion and to bring more flexibility at the transmission level for balancing the grid, for balancing supply and demand over, for example, national markets, or what we call the bidding zone level. So the difference with the day ahead and intraday markets are that these local flexibility markets are, as their name says, local, which means that the assets are localized. And that means that you can precisely solve congestions on a geographical area. That means you're using the right resources located in an area to solve the congestions at different voltage levels. And this is key because with the energy transition, we are seeing more and more congestions. The wind resources or the wind turbines or solar panels are not necessarily located where the grid has been dimensioned to accommodate them. And that means that this aggravates or exacerbates the grid congestions. Having the right tool to solve these congestions is key going forward to meet the net zero target that EU and the UK are looking into.
Okay.
So maybe a bit more on the UKPN initiative. I think this one is important because UK Power Networks is one of the biggest distribution system operators in GB. They have been pioneering the use of flexibility in order to dimension their grid in an optimal way. That means that they're not just building grid, they're not just burying copper in the ground, but they're also using the flexibility from flexibility resources in order to manage the constraints they have on the grid and to avoid costly grid developments, costly and lengthy grid developments. So we have been working with UK Power Networks since 24. We started a bit more than a year ago to offer local flexibility markets and to allow solving grid congestions on the UKPN network based on the flexibility from what we call flexibility service providers. And we have now reached more than 40 flexibility service providers. And what makes this initiative so exciting and also in a way pioneering is that we have now more than 250,000 assets that are involved in solving grid congestions on the UK Power Networks control area.
Yeah. Can you elaborate on what you mean by flexible assets? Can you illustrate what kind of participants are involved in this project?
So, indeed, this includes all types of assets that are able to react to a price signal and to deviate from a baseline in order to support the grid. We are talking about EV charging points, we are talking about batteries, we are talking about thermal assets, but also renewables on the higher voltage levels, but also very distributed assets. So, for example, heat pumps or electrical vehicles are really what is making the difference with these local flexibility markets.
Very interesting. Yeah, the UK is certainly interesting from that aspect. Yeah, we talked about that also a month ago as we deep dive onto the UK market. There's some serious innovation happening. It's quite exciting. Yeah. So let's move on to talk a bit about dynamic pricing and depot charging. Two topics which are interestingly connected. So dynamic pricing has become a key focus for CPOs operating depot sites or depot owners, right? So where the kilowatt-hour price is a huge driver of profitability, obviously. So how do you see CPOs starting to take advantage of spot and intraday market prices?
That's a great question because I think it's the whole rationale of electricity markets and spot pricing that is addressed here. I think, first of all, let's go back to the early 80s when MIT researchers like Fred Schwepp and his colleagues developed the first concept of spot pricing for the electricity markets. And that comes from the pioneering work of Vickrey and this responsive pricing. It's all the same concept that has been implemented for electricity markets. And this is key. This is key because it allows supply and demand to interact through markets in order to make sure we can manage the grid in a stable way, that supply and demand can be balanced at all time. It's important to remind that although batteries are developing, two of the greatest characteristics of the electricity markets are that, first of all, the good is barely storable, at least it's been so far, and that we need to balance supply and demand at each point in time to make sure that the frequency of the grid remains at the right level and that deviations are managed by increase or decrease of from production or consumption side. So dynamic electricity pricing, which is defined by varying prices over time, is really key because we are exposing the customers to fluctuations of the electricity prices, and instead of customers paying a fixed rate, they can react to the price signals, and that means consume at the best time, produce at the best time. So this is making the whole system more reactive to supply and demand fundamentals. And with in the previous decades, or at least before the intermittent renewable surge, the world was quite deterministic. We had a few forced outages. We had some stochastic elements for demand, for load. But more and more with renewables, we are seeing huge variations, huge production ramps from be it solar or wind, and that's creating very different conditions for the electricity system.
Yeah, absolutely. Yeah. So it's definitely the pure logic to go in that direction. I hear you. So what capabilities do depot owners or CPO platforms need to have to really optimize against day ahead and intraday prices?
I think this is a very good question. It's but quite also a vast discussion. I mean, there's both hardware and software. I think it involves a lot of the energy management systems. It involves aggregation capabilities, including disaggregation, which is something new. Aggregators have now to aggregate, disaggregate, depending on where the value is. That means very often having to build very complex virtual power plants, which have to react to the different price signals. There isn't one, there are various. It can be on the ancillary services for the system operators. It can be for congestion management in a more localized way. It could be at the bidding zone with wholesale markets. So that means having the ability to optimize across the different markets and getting the most value out of the flexibility that is on. It also means managing a balanced responsible perimeter. It means having a desk for trading or something that we might address later on, but having a trading bot, because the automation of trading has developed dramatically over the last decade. But in general, to answer clearly, I think technological requirements are key to get started, and this is what will make the difference among the different CPOs.
I guess, and especially depot owners, I think, or depot operators, that need seriously to upgrade their skill set and the profiles that they have on board, right? It's not trading bunker oil. It's really, or whatever, diesel in big, containers. It's about, managing the trading of electricity. If you're a big depot operator, you need some new people on board, that's for sure, yeah? And so are you seeing an increase in, let's come back to this topic, quite, I would say, futuristic and bot and AI driven, do you see an increase in algorithmic optimization or automated trading for flexible assets like BESS batteries or EV charging?
I mean, yes, but where I would argue is that this is not science fiction anymore. I mean, at EPEX SPOT, based on the knowledge and the capability of our shareholder Deutsche Börse from the financial markets, we have opened our API in 2012. That means that the first trading bots were able to connect more than a decade ago. Today, in 2025, out of our 400 members, more than 95% are trading the intraday market based on an automated trading solution, what we call, in a more familiar way, a power bot or a trading bot. So this is not science fiction anymore. It has developed a lot. And what this has allowed for the intraday continuous market is a very important ability for market parties to react to price signals, including in the nighttime. So more shorter products, 15-minute, 30-minute products that are traded automatically and closer to real time. And these are very important characteristics. Some of the companies are building their own bots. Some others are using the services of independent software vendors. And these companies are playing an important role in bringing the whole market into a more automated setup. So that was the first stop was automated trading. The second one is directly linking the assets or portfolio to react automatically to what's happening in the order books, including integrating AI capabilities, which is very likely going to be the game changer for the next decade.
Yeah, absolutely, yeah. Before we continue with the show, I have to tell you about something important. Co-located batteries are suddenly everywhere in the CPO conversation, but most operators still struggle with the first big hurdle, how to actually connect and control them. This is exactly what we recently unpacked in our masterclass. How to solve the connect challenge, how to unlock real value stacking with peak shaving arbitrage, flexibility revenues, DNO curtailment, with concrete example from Recharge, Q8 and other CPOs already doing it. So sign up for the on-demand masterclass. You really don't want to miss this one. Let's go a bit back and talk about flexibility and market design and come back a bit to the London project, UKPN. So you mentioned some of the assets participating in the local flex markets. Do you expect to see more EV fleets and depot chargers playing a role in such projects?
Yes, we do. I mean, we have already quite a lot. I mean, this is really interesting. Out of those 250,000 assets that are registered and are able to react to signals sent by the distribution system operator, a large part is EV fleet and depot chargers. So they are already playing a role. We do expect this to ramp up. We are seeing companies that are very active in that, that are ramping up the number of assets they're integrating. There's more and more competition for to meet the needs of the system, the distribution system operator. So yes, and this is where we think these are the assets that will make the biggest difference. Of course, they're not the only ones. We also see heat pumps, we see water boilers, freezers. So all these distributed assets are going to make the local flexibility markets of the future. But indeed, EV fleets are really important elements.
Yeah, it's of course, as they're growing fast, So, but if we look at the challenges, so what are the barriers today for smaller distributed assets to participate in flexible markets, according to you?
So I wouldn't. Let me answer in 2 points. First of all, I will address the larger ones because I think it's important to keep that in mind. That it seems that for larger flexibility providers, for example, the big suppliers or larger utilities, more generally. I think they have been working on wholesale markets for more than 2 decades. I mean, they know the wholesale market, the day ahead, the intraday. They've been active on futures markets. For them, the challenge is mostly the other way around, to disaggregate portfolios and to be able to bring dozens of thousands, or potentially tomorrow hundreds of thousands of decentralized assets to the DSO in order to meet the local flexibility needs. That's mostly for the larger ones. For the smaller ones who have been less active on wholesale markets, they are more agile, and usually already for them it's easier to become active on the DSO or a flexibility market. But for them, it's becoming more challenging to access the wholesale market. So there are 2 sets of challenges, be it for large or for small flexibility service providers that we need to address. Generally speaking, I would say that the decreasing barriers to access all these markets is the key to the success of the wider energy transition. I think specifically, for example, technical barriers, but also financial barriers. Financial barriers probably less acute for larger companies, but they are very important for startups and for new flexibility service providers. Technical barriers, I think, are important for all companies. So, for example, anything that goes in the sense of facilitating the onboarding of all those hundreds of thousands of assets is going to facilitate for the trading stage. Having a sequence of markets and the timings that are well aligned to allow what is called value stacking. And this is going to be, I think, one of the buzzwords for the next years, because value stacking is really going to be key. I mean, it's not just about tapping on wholesale market revenues. It's about tapping on all streams of revenues. That means ancillary services, congestion management, and it's the sum of these revenues and the ability to move the asset from one market to another as easily as possible that's going to make the difference.
Absolutely. Yeah.
So we're talking about standardizing, for example, APIs. We're talking about facilitating multi-market access. We are talking about streamlining the clearing and the post-trading stages, baselining, the metering and verification. All of these elements can facilitate the access to the multi-markets for the wider amount of flexibility providers.
Yeah. Absolutely, yeah. Well, that's exactly, we've mentioned here exactly what we're working on at FlexiCharge, is to be the technical aggregator and then connect with multi-market optimizers, as you mentioned, then to create a combined solution which is easier for the CPO or the depot operator to access and participate with their assets without too much headaches. Yeah, and value stacking, I agree, it's a new buzzword also for me, and it will definitely we'll talk a lot about that. We have a white paper which is out on battery storage, so BESS value stacking, because again, there's multi-layer. It's not just about boosting or it's about arbitrage. There's different layers, as you said. Yeah. So if you look ahead, so what design elements are important to make these markets attractive, you think, for people within the industry, fleet operators, charge point operators?
Before answering this question, let me rewind just a little bit, because the point you've, first of all, I'll be very happy to read your report and on value stacking and BESS optimization. But I really like to focus on this point, because I think disaggregation of assets, which is performed continuously by market participants, is going to be the key in this value stacking. The problem is in optimizing continuously, particularly complex, large sets of virtual power plants with dozens of thousands, hundreds of thousands of assets. So this is absolutely not trivial, and it requires important skills. Some assets will be in the right congested area, some of them won't. Some can participate in local markets, some can't. Some can participate in the balancing market because they have the right apparatus to do that, some of them can't. So this is really the most important element, I think, going forward, and allowing this value stacking, and obviously automating and facilitating the process as much as possible. To answer now your question on what are the design elements which are important to make these markets attractive, I would tend to simplify a bit this answer, saying revenues. Revenues, of course, that can be extracted will be a major element, and the ability to tap on various sources of revenues is going to be key. So that's the first point, because let's not forget, I mean, we all have the business case in mind, and the business case needs to be met. So revenues first, and then maybe more secondary, but still very important, the simplicity of the market access and the digitalization of the end-to-end chain, for example, with APIs that allow to integrate automatically all these assets. And that's true for both sides, from the flexibility service providers, but from the system operators' perspective also. They need to automate this process and make their procurement of flexibility as straightforward, as simple as possible.
Absolutely. Heard, yeah. API first. Okay, let's start to look a bit into the future of distributed flexibility together. So beyond London, what are some of the next big flexibility market initiatives that you see coming across Europe?
So I think that's a very important point, because going forward, it can't just be London. I mean, and I would say it's even more than London. It's the UK market. So it's GB, basically, because of the pioneering work that has been done by the authorities, by regulators. So Ofgem, DESNES have really pushed in the right direction towards a TOTEX approach, total expenditure, that allows comparing CAPEX and OPEX. So it's not just about burying copper in the ground, it's also about using the embedded flexibility as well as possible, but also giving signals to build more flexible resources going forward. So I think this is a very important element, because once you get this regulatory incentive right, the rest tends to follow. Now, this is happening also in the continent. So we are seeing, for example, with the network code on demand response, which is basically the network code for flexibility, we are seeing the similar push on the continental markets in Europe. And so And Scandinavian countries have already taken a few steps ahead of other countries, but we have some major countries that are moving along these lines. For example, RTE and EDIS are starting a coordinated approach to procure flexibility. We see that APG, for example, the Austrian TSO, is also coordinating with the Austrian DSOs in order to procure flexibility. These are two among many other initiatives that are likely to follow if flexibility markets become part of the regulatory landscape. But I would say this is not just a European thing. I mean, worldwide, everywhere where renewables are being integrated, we are seeing needs, major needs for flexibility. And this is true in some US states, for example, California or Texas, probably the most pronounced one in the US, but also in Canada. System operators are having flexibility requirements that they will need markets to deal with. Asian markets like Korea, Japan, we also see Australia moving along these lines. So this is really a worldwide phenomenon or a worldwide need that is the direct consequence of having a lot more intermittent renewables in the system.
Yeah, absolutely. I follow that. And so if we keep on looking a bit to the future and shaping it, so how do you see the interaction evolving between the traditional spot markets and these new local flexibility markets?
So this is the million-dollar question. I mean, this is really where the most important element going forward is the coordination between the different system operators at distribution side and transmission side. This coordination will be key, but also with the wholesale market. Again, for the same reason as mentioned previously, because value stacking for flexibility providers will be the key to the success not only of flex markets, but the wider energy transition. So if we take into consideration that selected markets are standalone and do not directly communicate with each other, this organization of distinct markets is not an issue if they are fulfilling distinct roles.
And now,
but
back to the show.
It means that we need to have the right sequence between the different markets that are overlapping as less as possible in order to provide the ability for flexibility service providers to offer their flexibilities where it is most needed and at the right time. So there is an alignment between the market sequence, between the different markets. That's the first step. And managing, obviously, this whole complexity will be really important in a decentralized way because, and this is my own personal conviction, that it's not just about setting up a central algorithm and asking them to optimize the electrical system. This becomes very complicated if you have millions of distributed resources across thousands of market participants and stakeholders. Optimizing this one in one go is just not going to work. So that means we have to distribute the complexity where it is best addressed. And what I mean by that is if the sequence is clear, then the roles have also to be clear, meaning that the system operators are operating the grid. They are the best players to do that. And each at the different control area they have, or the voltage level that they are operating. And then the market participants and the aggregators are optimizing the assets. They're making sure that the right assets are offered at the right time and the right location. And obviously in the middle, there is a power exchange or a market operator that allows supply and demand to meet in the easiest, the smoothest, the most standard way. And that hopefully in as many countries as possible.
Yeah, clear. So, and if you keep on this trajectory, so what regulatory or market design improvements would you most like to see to help distributed assets, including EV, so they can play a bigger role?
I think from the regulation point of view, some of these points are very well, some of the hurdles are well addressed in the Network Code on Demand Response. Obviously, it will be refined and improved over time, but I think it's a very good start. I mean, regulation is very often when it starts. Some countries are still completely absent in terms of the local flexibility market debate. I'm thinking of Germany, for example, that has chosen to remain cost-based, to keep a cost-based approach for congestion management. And this is too bad because the flexibility needs in Germany are significant, and a cost-based approach, unfortunately, doesn't allow demand response to integrate. It serves as a very poor proxy for storage assets, for example. So we can't leave all these assets, all the consumers out of the flexibility realm. So this is important that these exemptions are ended as soon as possible, and that the market-based approach, which has been set by the Clean Energy Package from EU regulation and is now becoming also one of the important pillars of the Network Code on Demand Response, is used as widely as possible. So regulation is important. I would add also the second thing is you have to give the right incentive, and that's where I'm coming back to this TOTEX, or total expenditure approach. I mean, if the only incentive for grid operator is to build more lines, and I'm not saying more lines will not be needed, they will be crucial,
yes,
but you can't just build new lines, and that takes time. This is very costly, and that means the perfect complement is to use the flexibility that's embedded in the system. Especially the one that you can localize, because it can address the congestions, which are increasing quite a lot. And so that's on the regulation. Sorry,
on the regulation. And what about the market design beyond revenue, or can revenue be improved or refined, or how do you see? How can we keep pushing in the right direction?
I mean, I think on market design, there's a lot that can be said on how market design can facilitate the development of these flexible assets and flexibility markets. I would tend to say coordination between the different markets is key, and with refraining to just take the shortcut and say, well, there's just going to be one algorithm that solves the problem for all of us. I mean, the European market is very large. The complexity of the problem with millions of distributed resources is too big. And we can't just solve it the way the Americans have done, for example, with the nodal market. This is too complex, and most of the assets that are coming on the system are coming on the distribution grid. They're not on the transmission grid. So the solution is not obvious how a nodal market could solve this problem with all these assets on the distribution grid. That means we have to go for a decentralized approach, an approach where, as I was saying previously, the roles have to be clear and the complexity has to be distributed across the participants that handle them the most, the best.
Yeah, exactly. Yeah, can't put all the burden on one shoulder. Absolutely. Yeah. All right. Let's try to play that you were advising a charge point operator or depot operator. So what should they be thinking about today to prepare for this evolving flexibility and dynamic pricing landscape?
I mean, they have to think about what you guys are also doing at FlexiCharge, is how you can aggregate that, how you can optimize, how you can aggregate, disaggregate. I mean, this is really the key. I think one of the important elements that has been very often left on the side has been consumer experience, user experience. And this is really the key because to take an easy metaphor, I mean, if you ask someone how much he's paying for their diesel or gas, they will answer immediately at the euro cent. When it comes to power, most people have absolutely no clue how much they're paying, who they're paying to, how much they're consuming. So there is, I think, a pedagogical element that's going to be key, and obviously make the experience as easy as possible for a consumer to be able to use their electrical vehicle, to use the services from a depot operator, and to facilitate their life. So I think this is going to be important in having a mass or wide EV adoption in our society.
Yeah. Yeah, good point. Absolutely. Yeah. There's something really cultural, and how do we relate to electricity the way we relate to the fossil energy? Absolutely. Yeah. All right. And then finally, what excites you most about the role of EV charging in shaping Europe's future energy markets?
I mean, first of all, I think electrification is a real benefit for our society. So moving towards more electrification is going to be a very key ingredient of the future for Europe, but for the wider, for worldwide. So electrification is important. Making the system reactive to price signals, this is a huge challenge. And if we want to make liberalization a success, we definitely need to tick this box. So having reactive assets, having reactive consumers, this is going to be key. And EV charging is clearly going in this direction. And maybe to close with an interesting, more science fiction view, I mean, I would dream of seeing self-driving vehicles moving along the congestions, facilitating the grid, charging where it makes the most sense, when the price is the cheapest, or discharging when the price is the highest. So, and I think I'm saying science fiction, but I hope that we're not going to wait 3 decades for that, and this is a lot closer to us.
Absolutely, yeah. You could imagine that even short-term, like taxi fleets, could be also integrating this so that their routes and their shift and so on is a bit always tweaked to also when they should plug and participate to flexibility rather than driving around. Same, right? Again, this always this trading and this trade-off, or this decision on what makes most sense for the system and for the benefits and the value creation, the value stacking, driving customers or charging or doing flexibility and so on. Yeah, that we don't even have to wait for the self-driving. But nice vision, very exciting. Philippe, I think. We could be talking for a long time, and it was great. It was intense. And for some people, probably also, that's why the podcast is here, to push the boundaries and expand people's knowledge. I hope people learned a lot here. I'm sure they did. And if it was a lot, they can put it on 0.5 to listen slower to all your insights. Because that was a lot. That was great. Thank you, Philippe. Wishing you a great afternoon, and looking forward to keeping in touch.
Christophe, thanks a lot for this very good discussion and for the very relevant questions. Thanks, and talk to you soon. Goodbye.
Bye-bye. And that's a wrap on this episode of the Childbone Podcast. I hope you found this deep dive with Philippe, Product Director at EPEX SPOT, as enlightening as I did. A few takeaways really stand out. 1. Local flexibility markets aren't just a concept anymore. They're operational, and they're proving that distributed assets like EV chargers, batteries, and heat pumps can actively support grid stability while unlocking new value streams. Second one, the UK Power Networks project with over 250,000 flexible assets is a glimpse of what's possible when CPOs are part of the solution to grid congestion, not just grid users. And third one, dynamic pricing isn't just a utility problem. It's becoming a strategic lever for CPO profitability, especially in depot charging and fleet operations. As we continue rolling out projects like our VPP with Recharge and co-located BESS pilot with Q8, for example, it's clear that the future of EV charging is more than just electrons delivered. It's about intelligence, integration, and interaction with the energy system. And if you zoom out a little further into Philippe's sci-fi vision, we're heading toward a world where devices talk to markets. Your car, your heat pump, your building will all respond autonomously to price signals, optimizing in real time without human intervention. A future where algorithms, not people, manage energy flows, and where flexibility is a new currency. How does that sound? So whether you're building charging infrastructure, exploring energy markets, or just looking for a smarter way to operate, this is your moment. Thanks for listening. If you enjoyed this episode, remember to share it, subscribe, and give it a nice review. Give it a 5-star rating. Thank you very much. And stay tuned, because the next wave of innovation is already charging up. Until next time, take care.